International trade is usually quiet, but on July 8, 2025, Canada made noise that echoed worldwide. Ottawa announced that American companies could no longer bid on Canadian government contracts unless they manufactured in Canada. This wasn't just another tariff spat, it was a seismic shift in North American commerce. The U.S. Canada relationship, built on open borders and shared supply chains, was suddenly upended. Canada's new policy, the Reciprocal Access Framework, was a direct response to rising American protectionism. The move stunned Washington, infuriated President Trump, and sent U.S. industrial stocks tumbling. In Canada, the dollar surged and the Toronto Stock Exchange spiked, fueling both pride and anxiety. The fallout was immediate. Major U.S. contracts were frozen, and cross-border suppliers faced sudden uncertainty. This wasn't a decision made lightly, it was the result of years of mounting trade tensions. The announcement marked a turning point, signaling the end of an era of seamless North American trade. Projects in Calgary stalled, defense deals collapsed, and Midwest suppliers were left in limbo. Canada's message was clear: if the US plays hardball, so will we. The world's most peaceful trading relationship had reached a breaking point. The question now, what happens when economic allies become rivals? This is the story of a trade war that could reshape the continent, and its consequences are just beginning to unfold. For decades, the US and Canada were economic partners, bound by NAFTA and later the USMCA. Their supply chains were so integrated that parts crossed the border multiple times before a product was finished. Billions in goods moved daily, supporting millions of jobs and creating stability. Trust and predictability were the foundation. American firms could bid in Toronto. Canadian suppliers thrived in Michigan. Disputes were rare and resolved quietly, with both sides knowing too much was at stake. But in summer 2025, that trust shattered. Canada's procurement ban on US firms wasn't just a policy tweak, it was a signal that the old rules were gone. The integrated supply chain was suddenly divided by nationality. Businesses on both sides scrambled to adapt to a fractured partnership. The era of open access was over, replaced by strategic exclusion. North America's economic unity had splintered. The consequences would ripple far beyond the border. Canada's move was a direct response to US action just a month earlier. In June 2025, President Trump doubled tariffs on steel and aluminum imports, citing national security. The tariffs hit allies like Canada hard, disrupting industries that supplied US factories. Ottawa saw the move as an insult and a misuse of emergency trade law. Instead of retaliating with tariffs, Canada chose a different path, restricting US access to government contracts. The logic was simple. If the US could claim national security, so could Canada. The new policy framed market access as a matter of sovereignty. It mirrored America's own Buy American rules, but turned them back on the US. Canada's approach was strategic, not just reactive. The message, if you want to sell to us, you must invest in us. The US tariffs sparked a fire, and Canada used it to forge a new economic shield. The trade relationship had become a battleground, and the rules of engagement had changed. Canada's Reciprocal Access Framework is sweeping and simple. To bid on federal contracts, foreign firms must manufacture at least 50% of their product in Canada. This closes the door to US exporters who don't invest locally. The policy covers over $120 billion in annual procurement. To sweeten the deal, Canada launched an $11.2 billion fund to help companies build or expand factories. The goal: attract investment and jobs, not just punish. The US enforcement is strict. Companies must prove local content, face audits, and undergo quarterly reviews. Sectors like infrastructure, defense, and transportation are hit hardest. US manufacturers and their suppliers are suddenly locked out unless they move production north. The framework is both a barrier and an invitation. Canada is telling the world, if you want our business, you must build with us. The impact is immediate and far-reaching. The rules of North American trade have been rewritten. The effects of Canada's new policy were swift and staggering. Nearly $15 billion in US contracts were frozen the day the policy took effect. Major projects halted, and months of work by American firms were wiped out overnight. Boeing lost a $2.4 billion aircraft deal, sending its stock tumbling. Oshkosh Defense warned of layoffs as Canadian contracts vanished. The steel industry, already reeling from tariffs, saw orders from Canada plummet. Small and mid-sized US suppliers in the Midwest watched their order books shrink. Financial markets reacted instantly. U.S. industrial stocks fell, while Canadian markets rallied. The Canadian dollar strengthened, and local industry stocks soared. Investors saw Canada's move as a win for domestic industry, even as U.S. firms suffered. The pain was real, immediate, and measured in billions. The North American market was no longer a safe bet. The shockwaves reached every corner of the supply chain, and the losses kept mounting. Canada's policy has redrawn the economic map of North America, creating clear winners and losers. U.S. manufacturers without Canadian plants are locked out, facing tough choices: invest in Canada or abandon the market. For many smaller firms, relocation isn't an option, they're simply shut out. But U.S. multinationals with Canadian factories like Ford and GM remain eligible for contracts, gaining an edge over their American-only rivals. This divide is fracturing corporate America itself. Canadian industries are the biggest winners, now favored for lucrative contracts. Foreign firms from Europe and Asia are also seizing the opportunity, moving operations to Canada to fill the gap. German and South Korean companies have already announced new investments and contract wins. Canada has become a magnet for global investment as companies rush to access its protected market. The policy is reshaping supply chains and alliances. The new rules are forcing businesses to rethink their strategies. The North American market is no longer unified. The competition for access has gone global. Canada's bold policy has sparked fierce debate. Prime Minister Carney insists it's about protection, not protectionism, defending Canada's industry against unpredictable U.S. actions. Trade experts praise the strategy for attracting investment instead of just imposing tariffs. By tying market access to local jobs, Canada is rewriting the rules of trade retaliation, but not everyone is convinced. The Canadian Chamber of Commerce warns of supply chain disruptions and higher costs for local businesses. They urge carve-outs for hybrid firms and caution against breaking vital links with U.S. suppliers. In the U.S., outrage is widespread. Politicians demand retaliation, and experts call the move a violation of trade agreements. Some fear this is the start of a new era of economic fortresses, not open markets. The central question: is Canada defending itself or escalating a dangerous trade war? The answer will shape the future of North American commerce. The world is watching closely. The U.S. Canada dispute is sending shockwaves far beyond North America. The conflict marks a shift from tariff wars to battles over market access and local production. Global supply chains are being tested as countries rethink how and where goods are made. Other nations are taking notes. Australia and India are considering similar localization rules. If this trend spreads, multinational companies may face a patchwork of local content requirements worldwide. Mexico, Canada's USMCA partner, has signaled support for parallel strategies. The EU is backing Canada, accelerating its own trade policies and preparing tariffs on U.S. goods. The WTO is caught in the middle, with both sides claiming national security justifications. Legal challenges are stalled, leaving Canada's policy in place for now. The longer the dispute drags on, the more entrenched these new rules become. The global trading system is at a crossroads. The outcome here could set a precedent for the world. The U.S.-Canada trade partnership now stands on shaky ground. Decades of trust have given way to suspicion and strategic maneuvering. Canada's new rules have turned an open border into a conditional gateway. American firms must now invest in Canada or lose access, forcing tough choices and painful adjustments. The WTO process is slow, so companies are left to adapt or exit. Some U.S. firms will invest north, others will cede ground to European and Asian competitors. North American supply chains are being rebuilt along new, more nationalistic lines. The lesson: even the closest allies aren't immune to economic nationalism. Canada's strategy shows that market access can be a powerful weapon. The future of alliances is uncertain. Will trust be restored, or is this the new normal? The answers will shape North America's destiny for years to come. What do you think? Is Canada's move justified, or is it a dangerous escalation? Share your thoughts below.